Well, we're seeing markets being weighed down by some macro data today. Out of China, we got the flash manufacturing PMI numbers from HSBC China survey, came in at a 6-month low, at a reading of 50. And the markets are forecasting for a reading of 50.2, and this is also below the prior reading of 50.4. So that's the latest in a string of poor data coming out of China. Of course, earlier this week, we had new home prices dipping, and we had PMI numbers generally not doing so well over the past few weeks. So on that news, Chinese stocks have been declining, especially in the shipping and industrial sectors. No immediate reaction from the industrial metals like copper, but we are seeing miners under pressure in the likes of BHP Billiton, Rio Tinto and Fortescue Metals. So those are among the top losers on Australian exchange today. So a lot of pressure on the ASX. It's set to become one of the worst performers in terms of markets today. That's expected to continue. There's no sign yet of the China economy rebounding in terms of the property market or PMI numbers yet. So demand for iron ore and commodity prices are probably going to be low for the interim. In Japan, we did get some good news for the economy. Trade balance numbers, there were some bright spots in the exports side. It rose 9.6%. That was more than double the expected 4.5%. So it looks like the weakening yen's been helping on the export side at least. On that news, we did see a slight pullback on the dollar yen, but overall it's back to pushing 7-year highs. Now, the rest of the week, there's going to be relatively few macro data or catalysts to look out for in Asia. So investors will be looking out for leads from other markets like tonight's US jobless claims and manufacturing PMI numbers.